crypto market's down about what, 70% off of its highs for Bitcoin. In every past cycle, you've done 80 to 85% drops.
That's right.
And that's with the Fed printing money. Here, the
Yeah.
Fed's doing the opposite. They're unprinting. They're sucking money out of the system. So why wouldn't we do 85 at minimum in this cycle, which puts us down, I mean, at minimum to 12,000, 13,000. And so remember, people said, don't fight the Fed when the markets were going up, which was the right move. Well, now they're doing the opposite. So wouldn't not fighting the Fed be very cautious on risk assets here? My worst case scenario, 3,500, that would be a 95% decline. And that would basically align us with what Amazon did in the dot-com bubble collapse. I think he's on point with 75. And the key is going into this number, honestly, I was in the 50 basis point camp because I mean, looking at gas prices, oil, copper, all these commodities have fallen dramatically. And so in my head, I'm like, okay, well, we should see that trickle through to the consumer price index. And we just did not. And I think the market got caught way off guard. The Fed now is locked in at 75. I think that's a no-brainer. The reason why I don't think there's 100 is because technically the Fed is really tightening additionally by unloading their balance sheet. So I believe in September, they started to reduce their balance sheet. And by reducing their balance sheet, it's technically a tightening effect as well. So if they do 75, it probably, with the unloading of their balance sheet, it's the equivalent of 100 basis points. So market does not like it. Crypto doesn't like it. Stocks don't like it. It's just risk off all the way around.
Risk off all the way around. And you brought up a good point that I don't think a lot of at least crypto guys aren't talking about. QT. That has started this month. I want to talk to you about that. I'll pin that for later. We definitely want to talk about that aspect because that is an additional layer to me of risk off behavior that the Fed will create for us. Now, you said 75 is locked in. No chance for 100 basis points, in your opinion?
I mean, there's always a chance, right? But I think the biggest thing here is the Fed really, and this is what I've been, yelling at the top of my lungs, is the Fed has to be so careful here, because if they trigger a bad recession, ask yourself, how do we get out of that recession? Because every past recession we've gotten into over the last 10, 20 years, the Fed has printed us out of. And if inflation is as sticky as it looks, they can't do that in the future. And so if they trigger a bad recession, we may be stuck in that recession for years, and we may have stagflation, all these negatives. And I think that's a real thing. If I was on the Federal Reserve Board, which I'm not, but if I was, I would be saying, Jerome Powell, be careful here, because you go too hard and too heavy, you're going to trigger this recession, and then we can't get the economy out of that recession.
So a tweet you put out earlier today, you said, increases the likelihood of Federal Reserve will be over tightening, thus pushing the economy into a recession, at which point they won't be able to get us out of.
Yeah.
So that's kind of what you were just talking about there. Isn't that what they normally do? They underperform and overshoot. That's typically what the Federal Reserve is good for, right?
That's their playbook, man. I mean, I tell you, you'd think just dumb luck would have them time something right, but they notoriously are just the worst at doing just right? They always overdo one way and then overdo the other way. And yeah, I mean, it's I think we're going. I really
a dead clock is right twice.
I mean, they have a hard job, right? I mean, they gotta look at the data. They gotta just time the amount of rate hikes just right. So it's not an easy thing to do, but in my opinion, I would, if I was Jerome Powell, I would do another 75, and then I'd sit back and wait multiple months to see the impact after a few months. Because if they keep on going gangbusters, there's no doubt they will cause a recession. Usually the way it works is that the markets, after today's data, they're readjusting very, very quickly. There'll probably be an additional readjustment for the next couple days. And then by the time you get to Friday, the markets will probably be priced in to 75, maybe 100, and they'll just sit there and kind of go sideways until we get that data from the Federal Reserve. So the market is in that. So anytime the market gets information it didn't expect, it quickly tries to readjust to factor those expectations in. And then until it gets new information, it'll kind of hover around that level. So that's what I'm expecting, some volatility in the next few days, and then getting into a quiet period into the end. What it tells me is that the supply chain is still an issue. That's still keeping prices up. It also tells me wage pressures mean that companies have to charge more for their products because they're paying their employees so much more over the past 12 months. And all of these are then negating the drop in oil. I mean, imagine if oil was still at $120 a barrel, where we would be at that point.
Oh my God.
So you know, it's definitely not a good position. And you can see from the market reaction, it freaked out the markets. I mean, this was, in terms of a trader's dream, this is what you love. But an investor, man, you just shake your head at it and you kind of just look to fight another day.
Yeah, and what you have on the screen here at QQQ.
Yeah, so this is the NASDAQ 100. And again, look at this, down 4.3% on the day for the NASDAQ 100. That is probably one of the bigger drops we have seen in one day in a long, long time. And what you can really see here is that the market going into the CPI number was rallying up because it thought we were going to see a reduction in inflation, lower inflation data. And in one day, you've wiped out 1, 2, basically 3 up days in a row. You've wiped those, and those were big up days. I mean, the S&P was up over 1% on all those days. You've now wiped it all out in one single day, and that's, technically speaking, that does a lot of damage. The one line I'm really looking at now is from this low in June to this low that we put in early September. That's your big support line. So I'm watching that closely. Can it hold going into the Fed? Do we retest it? Does it break below? I mean, how does it all play out? But if we break this line, guess where you're headed? You're headed all the way down to the June lows right here. And that would be another nasty, nasty sell. So yesterday the last couple days, I was taking some of my longs off the table. There were stocks like NET and some of these other kind of tech stocks that had rallied significantly. So we were looking to take some of those off the table. And then yesterday I bought SDS and QID, so got exposure to the short side of the S&P. And I'll show you why. I mean, it was really kind of cool to see. If we go to the SPY chart, pre-market, by the way, we were up. And in fact, yesterday, look at this. So as a technician, you had a 4-day up move right into this pivot, which then coincides with this little pivot right there. And then it makes sense. 4 days up. Got to have that pullback right off this little area right in here. So I didn't have a ton of short exposure out there, but I certainly got that exposure after that 4-day rally. Crypto-wise, I mean, you're seeing Bitcoin get slammed today. That's a nasty fall on Bitcoin. Now, interestingly enough, it came after 6 up days in a row. So 6 up days, you could argue that you were due for a pullback. The question is it just a pullback to support right here? This is where you should have support right around 20,400. If it holds that, maybe it gets another up move. I'm still in the camp, though, that when all is said and done, 6-12 months from now, we're going to have seen crypto and Bitcoin go down quite a bit more before all is done.
Yeah,
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.